Ryan Paisley and the awesome Mr. Michael Brown. Let's get him on the show. Send the invite over. Let's do the legals whilst he joins. So, as usual, nothing discussed in this space. This session constitutes trading and investment advice or infers any kind of endorsement by PIQ Global Limited, Trainers PIQ or PIQ Suite, or indeed the host, which as you know by now is Mr. Michael Brown and myself, Mr. Ryan Paisley. Good morning, my dear friend. How are you?
Well, good morning, Ryan. Good morning, everyone. Yes, not too bad, although absolutely
Oh,
bloody knackered. It feels like we've done about 3 weeks worth of work already, and it's only Tuesday morning.
well, yeah. What a year yesterday was.
Yeah, quite. That's a
So,
very good way to put it.
so much for closing the gap by Friday. We closed it. We closed some gaps by Monday close.
Yeah, that's very true, mate. Oh, dearie me.
What's
Right,
been
shall we crack
happening?
on?
Yeah, let's crack on. Busy day. People got headlines to watch.
Indeed, yeah, it was a busy day yesterday as well. Of course, all eyes on trade and tariffs and specifically what Trump would do next. Of course, we came into yesterday with Trump having announced 25% tariffs on Canada and Mexico and an additional 10% levy on Chinese imports, which were due to go into effect at midnight Tuesday morning, so 5 o'clock in the morning today here in the UK. Yesterday, though, first of all, on the good news front, it was announced that the tariffs on Mexico would be delayed for a month. This came mid-afternoon yesterday. There was a call between President Trump and the Mexican President Sheinbaum. Mexico basically saying that they're going to throw a load of troops on the northern border, and that was enough for Trump to turn around and say, "Okay, fine, we'll hold off on tariffs for a
But
month."
sorry, so I've just got to butt in because I can see our dear friend Dario Perkins is listening, and I did feel quite bad yesterday for mugging him off because before the capitulation from both Mexico and Canada, he did say that um, no one was going to succumb to Trump's threats, and it would be a bit of a standoff, a Mexican standoff, if you will. But
Oh
yeah,
dear.
that it didn't age too well. But as he says, the outcome he predicted did materialize, but just not in the fashion he said it would.
Indeed. And you're absolutely right. You have rather stolen my thunder there because later in the day, around about
Sorry.
10 o'clock last night, we had a similar situation when it came to Canada. Trump and the Canadian Prime Minister Trudeau, they had a conversation, and Trump decided that he would be suspending tariffs on Canada for 30 days as well. The situation with China, though, is substantially less rosy. The 10% tariff on Chinese imports has indeed gone into effect this morning, and within about 30 seconds of those tariffs going into effect, there was a barrage of headlines around what China will do in response. They have also slapped some tariffs on US imports, specifically a 15% tariff on imports of coal and LNG, which is liquid natural gas. China have also
Sorry.
added the.
No, I think you're gonna. I think you're gonna do
Go
it.
on.
So I thought you were gonna miss the other bit, the 10%, but it sounds like you might be doing it or not.
No, I was going to go on to that. So they've levied tariffs on a whole host of other imports. They've also put export controls on tungsten. They have added the PVH Group and Illumina to their unreliable entity list. And in a move that is not a coincidence, they've also announced that they are going to open an antitrust case into Google. And of course, Alphabet reports earnings after the close today. In addition to that, we had reports via the RFA on the negative side of the trade thing, rumours that Trump is apparently considering a 10% tariff on the European Union. And actually, the euro has been a fairly notable underperformer over the last few days. I think the market is firmly in the mindset of, okay, fine, we've got Canada, we've got Mexico, we've got China. Europe's going to be next. I think we all know
Yeah.
that at this moment in time. And it's worth considering, actually, that if again, do you take Trump at face value? We could talk about that until the cows come home. But if these tariffs are being imposed as a result of fentanyl and as a result of drugs flowing into the United States, and promising to do more to control that is the so-called off ramp and the way that you avoid tariffs, you would question, one, that logic doesn't really apply to the EU, and secondly, how the hell did the EU get out of it? Because that's just simply not happening in terms of those flows between Europe and the United States. So that will certainly be one to watch. In terms of the market reaction, well, we were yo-yoing around all over the place, to be completely honest with you. The S&P ended yesterday lower by around about 0.75%, although both the S&P and the Nasdaq were down by over 2% on an intraday basis. So, as you alluded to earlier on, pairing those losses, quite nicely as the day progressed. We also saw a similar sort of theme in the Treasury complex, where we initially saw the front end selling off on a repricing of higher inflation expectations and more hawkish Fed policy reaction. We then saw that all pair back as those tariffs were, effectively cancelled. And we saw a similar thing at the long end, where we initially saw some haven demand creeping in, 10 and 30-year yields down about 7 basis points on the day. And then as and when those tariffs were scrapped, we saw long end yields reverse course. And again, that was in the foreign exchange space as well, with the dollar ending the day marginally firmer, but the dollar index below the 109 figure, having traded as high as 110 early in the week. That was mirrored by pretty much all other G10s as well, with the euro recovering its way back to the 103 mark and cable clambering north of 124. There is, though, still some haven demand lingering. Gold up another percent yesterday, with the yellow metal continuing to shine, touching fresh all-time highs at $2,825 an ounce. Away from trade, plenty of other bits and bobs to get through this morning. On the data front, we had the latest inflation figures out of the Eurozone yesterday. Headline CPI rising by 2.5% on an annual basis in January. That was the fastest annual rate of inflation since July of 2024. Core inflation also a little bit hotter at 2.7%, above the 2.6% consensus. This data, though, is not going to deter the ECB from another rate cut at the March meeting. Their focus is at the moment firmly on downside growth risks and also on developments on the trade front. Meanwhile, we also had the latest manufacturing PMI figures out of the United States. The ISM manufacturing PMI index rising to 50.9 in January, above the 49.3 prior and also the 49.9 consensus. And that is the first time that the gauge has been above 50 and into expansionary territory since all the way back in October of 2022. Although do bear in mind, of course, that this data the survey for this data was well before tariffs were started to be thrown around and then cancelled. So do bear in mind that in the context of the release. In terms of other bits and bobs, we did have the US Treasury giving us their refunding announcement yesterday. They have marginally cut the Q1 borrowing estimate to 815, prior 823 billion. Of course, the breakdown of how this issuance will be split up across the curve will come on Wednesday lunchtime here in the UK. Sticking with the United States, we had news yesterday that President Trump has signed an executive order to create a sovereign wealth fund in the United States. This will be led by Treasury Secretary Scott Bessent and Commerce Secretary, well, assuming he's confirmed, Howard Lutnick. Trump floated the idea that the sovereign wealth fund could buy TikTok, which is just mental. But I think perhaps the biggest question when it comes to this whole idea is, where the hell is the money going to come from? That is something that has suspiciously been left out of all the communications around that so far.
Just on that, I know there's a lot of, and it's good that Cam's listening in, obviously, who does the crypto blast for PIQ. Hello, Cam. That'll be out shortly. So a lot of people say, well, pinning that, a lot of the crypto bros pinning their hopes on that the sovereign wealth fund, part of its purchases would include cryptocurrencies. And as if by magic, one of Trump's sons yesterday evening actually put a tweet out, something along the lines of, "Now's not a bad time to buy Ethereum." So yeah, buy your beds. Let's see what happens there. But if they do announce that they're going to add Ethereum to this sovereign wealth fund, then this is just an absolute carve up.
Yeah, I think crypto needs some fucking insider trading rules ASAP. Moving on from that, sticking with politics here in Europe, France, they have forced through the PM in France, Bayrou, he has forced through the budget. That leaves him at risk of a no confidence vote, although it's a little bit weird because the right aligned parties in France, they are going to bring a no confidence motion against Bayrou for forcing through the budget. Left-wing party, the socialist parties, though, they are not going to back that motion, and instead they want to bring forward their own no confidence vote because they say that Bayrou has, quote, not upheld Republican values. In summary, I think what we're going to see in France this week is a grand total of 4 no confidence votes in the Prime Minister, with the first 2 of those to be voted on tomorrow. And then, of course, if Bayrou stays in power, the remainder will be voted on at some point later in the week. I think it's unlikely that Bayrou is actually voted out in any of these motions, given how things look at the moment. Because although there are all of these motions, and although all of the other parties are backing a no confidence motion, they're not backing the same one. No. So it seems that party politics is slightly getting in the way of actually all of them furthering their aims. But basically, the nub of that is France is still a political shambles. Here in the UK, in terms of politics, Bloomberg reporting yesterday that Rachel Reeves has reportedly told some government departments that their budgets may be frozen in cash terms. Now, this is important because previously we were looking at real terms freezes in government budgets, which means, yes, they get more money, but it's only enough to keep up with inflation. If budgets are frozen in cash terms, that means that, if you've got £1 billion as your budget now, you're going to have £1 billion as your budget next year. And if costs go up and if there's inflation, tough, you just got to deal with it via spending cuts, via trimming headcount, etc., etc. Of course, this comes amid the likelihood that the Chancellor's £9 billion worth of fiscal headroom that she left herself at the October budget has pretty much entirely been eliminated by the anemic economic growth that we've seen here in the UK since that budget. We're noting that the OBR's first forecast estimate ahead of the spring statement at the back end of March, that forecast estimate is due today. It's unlikely to be particularly rosy, and I think the chances of that leaking into the media are very, very high. So any sterling or gilt participants do bear that one in mind. And of course, this comes against the backdrop of a continued surge in support for the Reform Party, which is of course led by Nigel Farage. They topped a Sky News YouGov poll, which is kind of held up as a bit of a gold standard here in the UK for the first time yesterday. They were polling at 25%, Labour 24%, Conservative 21%, Lib Dems on 14%. I think perhaps the bigger takeaway than Reform topping that is, firstly, you've got 3 parties there, all within the margin of error of each other, and actually you've got 4 parties that are relatively evenly split in terms of support. There is, of course, still a very, very long way to go until the next election.
You say that, but in terms of if you look at betting markets, so Labour's just favourite, then it's Reform, then it's Conservative. So I'd say quite big news is that Reform have overtaken Conservative in the betting market. I would say Labour would be far larger odds if it wasn't for the fact that I think the play now that people are looking at is that Reform and Conservatives are splitting quite a sizable vote. And that would be, that's pretty much all Labour are clinging on to now, is that, the voters will be kind of split between the two, which gives the Labour voters far more power. But obviously, and then Lib Dems are like 80 to 1 shot, so they're not even in the running anymore. It's ridiculous.
Indeed. 4.5 years to go, though. A lot can happen in that time.
Well, do you think it will last?
God only knows
where we'll be. Before we get an election? Nothing. You don't think?
Absolutely.
You don't think we'll get anything coming up in between? Something extra curriculum?
I doubt it, but time will tell. From before we wrap up this little segment, firstly, OPEC, they made no changes to output policy at their JNMC meeting. They will next meet at the start of April. And last but not least, some news out of China this morning. Going back to DeepSeek AI. They are apparently reportedly looking to. Christ, I can't even read this bloody headline out. They are reportedly preparing to adapt to China's domestic GPU chips in order to bypass NVIDIA.
So they've been using
of
NVIDIA
course, as far as
now.
we're well, exactly, and that does sound like they've probably told a few porkies around how many chips they've been using to come up with those models, which absolutely are not spying on anyone in any way, shape, or form when you type all your data in.
Careful, Tom's listening. Cool.
That's why I said it.
Well, thank you very much for that, Michael Brown. Just a couple of things. Firstly, on the China tariffs that Michael brushed on just now, just to add, as well as that 15% on US coal and LNG, there's 10% on crude oil, farm equipment, and some autos. Also, regarding these metals that they're going to put sweeping controls on, they're targeting 5 metals that are used across the defense and clean energy and other industries. And these are things like tungsten, indium, if that's a real metal, I don't know. And basically,
there's a reason I didn't mention these
because you couldn't pronounce them. And now I'm realizing where I've been strung up here. And these are a host of critical metals that are vital in everything from smartphones and electric car batteries to infrared missiles and ammunition. As I made my notes this morning, crude oil fell nearly 2% as US tariffs on China took effect. Donald Trump's pause for a month on decision to steep levies on neighbors, and Canada and Mexico have kind of abated that somewhat. What else we got? Federal prosecutor appointed by Donald Trump said on Monday that the FBI was investigating the targeting of staff involved in Elon Musk's effort to slash the size of government, US government. So basically, that's people getting in the way of the Doge people trying to do their job, which we'll see how that plays out. Apparently, Elon Musk has got a team of 6 addled-riddled kind of super nerds that are just kind of camped out 24 hours a day trying to work out how to make the US government's tech more efficient and all their software and that, and work out where they can make savings. That's an interesting one. What else we got? Former NATO Secretary Jens Stoltenberg was set to become Norway's new finance minister on Tuesday as part of the cabinet reshuffle. Air forces of the Philippines and the United States held joint patrols over the South China Sea on Tuesday, a move that angered China, which also conducted a routine patrol over a disputed shoal. Israel is preparing to send a high-level delegation to the Qatari capital Doha to discuss continued implementation of the Gaza ceasefire agreement. That's according to Prime Minister Netanyahu's office. He said that this morning. Saudi Arabia's non-oil business sector expanded its strongest pace in just over a decade in January, driven by a surge in new orders and robust business activity. That's according to a survey that was out this morning. Hundreds of people packed a port in Santorini in the early hours of Tuesday to board a ferry and reach safety in Athens as a series of quakes have kept shaking the Greek tourist islands. They've yesterday they actually issued seismic days in schools where basically I guess it's like a snow day, but instead of snow, you got the risk of lava coming down on your head. So yeah, one to watch in the Greek island that's known for its volcanic activity. It's getting a bit shaky over there. UBS Group posted fourth quarter profits that beat forecast by a wide margin and said it would buy back up to $3 billion with a B in shares this year if there were no major changes to bank capital rules in Switzerland in the near term. Rio Tinto said on Tuesday it had begun clearing iron ore ships from 2 Western Australian ports as the tropical cyclone offshore swells seas and complicates its efforts to repair infrastructure damage by a previous cyclone last month. We did report a couple of weeks ago that they were having some difficulties exporting from these ports over in Australia, but it seems like stuff is on the move. Diageo has withdrew its medium-term organic sales growth target on Tuesday. That's as the world's top spirits maker took steps to try and mitigate the impact of US tariffs. US Donald Trump said on Monday there was a lot of interest in TikTok, but as his administration seeks to broker a sale of the popular app, as Michael said, perhaps that goes straight to the US Sovereign Wealth Fund. Wouldn't that be a sight for the eyes? And finally, just a couple of stats or a couple of quotes and whatnot from Andrew Hart and his great morning note that he puts out. Former JPM strategist Marko Kalanovic predicted.
Oh no!
What do you think? What do you think he's going to predict? What do you think he's going to predict?
Well, he's not going to be bullish.
No, he's not. He predicts a substantial down. That's why I put him on it. He predicts a substantial downturn in US stocks. Color me shocked. Potentially falling 1,000 points or more due to risks such as high concentration of geopolitical turnover. Kalanovic believes the S&P 500 could fall to 5,000 and potentially even lower to 1,000, to 4,000, citing potential turmoil from the new political climate. For those that aren't aware, this guy lives in the bear cave.
Yeah, just to give you some context on that, the bloke got sacked from JPM because he was so far in that bear cave, he missed out on, well, at that point, it was 18 months worth of equity market gains.
Well, also, because he got work from home. He was a WFBC. Get it? Read it? Come on. Work from bear cave.
Oh God.
Make myself
too good for me.
Sticking with JPM. It seems like a new JPM equity derivative strategist, Emma Wu. Well, I say she's new. It's the first time I've heard of her. She reported this morning or late last night, whatever it was, that as of 3 p.m. Eastern time yesterday, retail had net bought $2.8 billion worth of stocks, and that's versus the 1 month average of only 508 million. So yesterday, 2.8 billion, 1 month average 508 million. 2.8 billion is a level that's only been seen twice before, and both times that was in March 20, and I think we all know what that was.
Yes,
that was when it was by the diptastic during COVID. But that's it from me.
Good stuff.
Back to you in the studio.
Thank you, Ryan. Well, in terms of today, then, the data docket and economic calendar for the European session is very quiet indeed, actually. There's not particularly much going on at all. But this afternoon is a little bit busier. We do have at 3 o'clock London time the latest JOLTS job openings data out of the United States. Job openings seen at 8 million exactly in December, marginally lower than the 8.098 million that we saw in the prior print for November. Although, of course, this data doesn't have too much by way of read across to Friday's labour market report. We also have the latest US factory orders figures out for December. They are seen falling by 0.7% on the month compared to the 0.4% decline that we saw a month prior. And then towards the back end of the New York session / the start of the APAC session, we have the latest jobs figures out of New Zealand. These are due at 9:45 London time this evening. Unemployment, that's seen rising to 5.1% from a prior 4.8%. Earnings growth is seen unchanged at 0.6% on the quarter. And overall employment, that's seen falling for a second straight quarter, actually down 0.2% in Q4 compared to the 0.5% decline that we saw in Q3. Just for a bit of context around that, money markets, they are fully pricing a 50 basis point cut from the RBNZ at their next meeting and their first meeting of the year, incidentally, on the 19th of February. In terms of other things to keep an eye on today, the central bank speaking docket, we're due to hear from the ECB's Villeroy, as well as the Fed's Daly and Bostic, and then the Fed's Jefferson will be speaking in the overnight session. And another busy slate of corporate earnings lies ahead. Before the market open, we're due to hear from names such as PayPal, Spotify, Pfizer, PepsiCo, and Ferrari. So we'll see whether their shares can race higher. And then after the market close, we're due to hear from the likes of AMD, Snap, who tend to experience a ridiculous amount of post-earnings volatility. And also we're due to hear from Alphabet, aka Google, where options imply a move of plus or minus 5.5% in the stock in the after-hours session. So a few bits and bobs for equity participants to get their teeth into as well. And that is your lot from me this morning.
I forgot I was muted, so you didn't hear me groaning at your Ferrari.
I did wonder why you hadn't mentioned anything about that, but
yeah,
now we know.
I was coughing and I was coughing. I muted myself and I forgot to unmute, and I was probably for the best because I might have dropped the C-bomb on you.
Oh dear.
But anyway, thank you for
family
that.
program.
Mr. Michael Brown. Pardon, sorry?
I said it's a family program.
Well, is it? Yeah, but you've met my family.
No comment.
You leave Babs out of this. Right, Michael Brown, thank you so much as always, my dear friend. Listeners, thank you as always, especially the regular listeners. We really appreciate you tuning in each morning. Just a bit of, not housekeeping, but just some quick updates. Obviously, keep an eye out for Cam's Crypto Blast out very shortly. He will actually be doing lots more with PIQ coming into the weeks and months ahead, which is great. Also, if you check my pinned tweet, I have renovated, or whatever the correct word for this is, our US political Twitter list. I've also made one that's very much Trump focused, so it's just Trump and the kind of rapid response 47 Twitter accounts and a couple of his kind of key people and key accounts to follow. So definitely check those out. Hopefully, it helps you, get that ratio of
That's
signal
very
to
useful,
noise
actually.
correct.
I was having a look at
Because
that this
there are
morning.
a fantastic, as I put on the tweet, there are a shit ton of great sources on X, but the noise to ratio or signal to noise ratio sucks. So hopefully these Twitter lists help you out. The US politics list is actually available on the PIQ platform as well. So too is a crypto list that me and Cam put together yesterday. I still need to get the Trump list added, but yeah, everything's got some dev resources that needs doing, so I kind of got to schedule that in. But definitely check out the 2 Twitter lists that are up in the pinned tweets on PIQ Suite account. But anyway, we will see you this time tomorrow. Take care, have a good one, keep it tight.
Bye for now.
Bye for now.